PSD2, AISPs, TPPSs, RASPS, a whole bunch of acronyms. I'm assuming most people in the audience loosely understand what most of that stuff means. Am I right? Sort of, yes. I think most people generally do. So without getting into too much of that side of the detail, I guess open banking and PSD2, the regulation in the UK is the opportunity for customers to share their data if they so wish. They can share their data with banks, with other third parties, which will provide them with a better banking service. What I'll do, I'll ask each of the panelists to give a quick introduction of who they are, what they do, what involvement they've had with open banking and PSD2, and perhaps share a couple of thoughts just top of mind. Why is open banking important? And from a consumer perspective, as we said we all were, why should we care? Stephen, would you like to go first?
Hi, I'm Stephen Wright. I head up requirements for RBS for the open banking program on the compliance side. I've been involved in open banking since its inception back in 2016. RBS delivered open banking APIs for its retail customers in January and also for corporate banking customers in February. So we're working with third parties and we have our APIs live at the moment from an open banking point of view. I see open banking as a step change, really, and a big opportunity to deliver innovation, but also deliver choice and flexibility and transparency to end customers. And I think there will be a kind of tipping point. It might be a few years where customers get used to it and have some compelling use cases, but change will happen.
Very good, thanks. Nick?
So I'm Nick Middleton. I am the Strategic Payments Director at Virgin Money. I've been doing PSD stuff for 10 years now, from PSD1 when I was a Senior Program Director at Lloyds, implementing the first PSD, phases 1 and 2, when nobody really gave a damn about payments regulation. And then I've been involved with payments ever since. I sat on the Open Banking Working Group Steering Committee that wrote the Treasury report that the CMA then picked up and turned into open banking as we know it. And I've been dealing with strategic payments at both Lloyds, Nationwide TSB, and now for Virgin Money for the last 4 years.
Thanks, Nick. Oh.
Hey guys, Mark Baxter, work for HSBC. I'm the UK lead for open banking commercialisation, which is probably, well, it sounds the coolest job in banking at the moment. So I've been thinking deeply, less about the regulatory stuff that the guys to my right have been thinking about, and more what does it mean from a consumer perspective for about the last year. So I've written the UK strategy around what is it that banks need to think about and what is it that they need to do in this kind of new evolving world. And also been working with partners to deliver new use cases for consumers. So last week we delivered our first open banking use case that's fully kind of consumer facing with the guys just to the left.
Thanks. And talking to the guy just to the left.
Yeah. So Roger Vincent, Head of Innovation at Equifax. As Mark said, we've kind of got the fun job to, we don't have the headaches that I suppose you guys have with all the acronyms. We just get to sit in a room and dream up new ideas that open banking and PSD2 might enable for consumers. So as you might expect, credit bureaus like Equifax are about data, insights and technology. And a heavy amount of kind of what we do currently is kind of driven through partnerships. So it's about kind of positioning ourselves and orchestrating these new customer journeys that leverage new data and create new insights and new customer experiences in the predominantly the lending journey, but we might look to diversify in the future.
Okay, thanks Roger. And last but not least, Julian.
Hello, Julian Gavers. I work for Lloyds Bank Group. I'm architect within payments and doing the architecture and strategy for payment systems. So I've been involved with PSD2, since it first got drafted, and as with Nick, I started doing PSD1 back in 2009. I was involved in writing the open banking reports that became the precursor to the CMA remedies that we're working on now. So I'm also involved in the open banking group for defining the standards. I I certainly see it as very important. If you look, I mean, effectively, PSD2, open banking, effectively is driving a new channel for the banks. That's not a small task. If you think, started out with originally branch channels, ATM, telephony, internet banking, mobile, and now the next generation is APIs. Quite different, of course, because they're not directly consumer facing. It requires you've got a third party in the mix. But that's a significant change. So I definitely see it. So it's not because it's not consumer facing. It's not picking up massively. We went live in January, but certainly over the next few years, I just see it evolving and potentially being enormous.
Thanks, Julian. So PSD2 went live middle of January, as you mentioned. Some of the banks were there and ready on time, and other banks got an extension. We've seen a lot in the press about PSD2 coming, and I guess we were perhaps waiting for the explosion to tell us that the revolution was here. We've seen, I guess, previous examples of regulation where I mentioned 7-day switching earlier, where the regulator has had a regulation to drive greater competition into the industry. Why do you think PSD2 will be different, and why do you think it will lead, along with open banking and CM and so on, to that revolution in banking? Stephen, do you want to go first?
I think there's a key difference of open banking in that, at least from the UK and increasingly across Europe, is that you've got the industry coalescing on a set of common and open standards. And the only way this is going to take off and the APIs are going to work is if a third party can access the same API with any financial institution in the UK, and it works the same way, and the customer experience is the same. And I think that as a foundation will kind of help this take off from third parties being able to have the building blocks to build those compelling use cases.
I've got a slightly different view on sort of the competition landscape.
Yeah.
Seeing kind of from working across kind of the banking landscape and being kind of an ex-consultant, I think the biggest irony of open banking and PSD2 is that it's increased competition between the banks and not necessarily in non-banks or non-prime banks. So you wouldn't get Lloyds announcing that they've got 3 billion of investment without something like open banking. Yeah. That's named as one of their kind of key experiences, and customer experience is called out. So I think open banking has kind of been the catalyst for increasing the focus on banks to invest in digital, to invest in new customer experiences, and to do more with their customers. So it's kind of ironic that open banking was there to break down the banks, but I think we don't naturally leave our banks, we don't naturally switch. Not because we're not offered the best solution, but because we don't change our devices, because we can't be bothered to download a new app and get a new password or change all our card details. Yes. There's still friction in that journey that will keep us at our banks. So if the banks react and kind of up their game, I think they stand a good chance of winning.
Mm-hmm. And do you think the market share is going to change for the big banks, or do you think it's more about them providing richer services, better services and experiences for customers, lower costs?
So, I mean, my view is actually there's a real open banking has made it far easier for us to try stuff out. I think sometimes, having worked in banks for over 10 years, actually, a project will cost you £1 million. That's kind of the thing that gets something started within an organisation. Actually, I've seen firsthand from delivering that first use case, actually you can deliver stuff far more cheaply and far more quickly and try it with consumers. And I think the reality of this is no one knows how this is all going to play out, but actually we talked about the compelling use cases for customers and consumers. Actually, you need to just test and learn. You need to be able to try it with consumers, innovate, learn, and then evolve the model as you go.
Yeah. So going back to your original point about current account switching and PSD2 and open banking, how it's different, we came to kind of the wrong conclusion with the Independent Commission on Banking and the resolutions to competition that they asked us to look at, which was that customers didn't switch because it was too difficult. Well, it wasn't easy, but it wasn't too difficult. The reason customers didn't switch is because they all thought the banks were exactly the same. So what might be rather ironic is that with the advent of open banking and PSD2 and markedly different propositions, you might see the current account switch service being used more and more. But there has to be something that differentiates what we do in order to get customers to move around and increase competition. Because all of these things are designed to increase competition in the marketplace, which leads to better choice and better outcomes for customers.
So coming back to this point about regulation, and I guess we'll get into some of the detail of what makes it difficult. We saw from the previous presentation, lots of complexity, lots of options, lots of detail in the APIs and so on. And we're kind of sandwiched between two big regulatory mountains at the moment. We've just had PSD2, and if we look not too far ahead, we can see GDPR. Do you think that PSD2 has had the right level of focus within banks? Or do you feel because there's a bigger stick on that 4% of revenue on GDPR that's got the bigger focus?
I mean, I can say that. I mean, I don't think I'd agree with that. I mean, certainly within our bank, PSD2's got a massive focus. I.e., our CEO talks about APIs, which you think, I'm a technologist. A CEO talking about APIs, even 5 years ago would have been unheard of.
Yes.
So definitely not. But yeah, they're both equally focused and clearly have a bit of similarity. And back to the regulation, this is why I see PSD2 and open banking being important. Is it kind of almost like you can compare it to the telecoms deregulation in the late 80s, where at that point, if you wanted a handset, you had one choice. You went to BT or the post office, and you got a beige handset, and that was it. Open banking now, you might bank with Bank X. You don't necessarily need to use their app, and that then just opens up competition massively. And it's not a one-size-fits-all anymore. Consumers will be able to pick and choose the apps, and you might see a proliferation of apps that are very much dedicated to very specific use cases, which today banks don't build. They just build one app. But in the future, there is now, specialists can build specialist apps for very specialist pinpoint markets.
And you've seen that happen over a period of time as well. There's a kind of proliferation of kind of fintechs that are taking very specific services and doing them really, really well.
Yeah.
And do you feel so? Clearly, Julian, you said PSD2 is getting a lot of attention, a lot of focus. You've got your board director talking about APIs, which is unheard of. APIs have been around for years, right? I'm sure board directors don't normally get their hands dirty with such language. But do you think that with GDPR, the focus on personal data, PSD2 talking about sensitive payment data, could it be that GDPR would put a dampener on PSD2? Do you see conflicts between the two regulations, or are they complementary?
I think there's inevitable conflicts. I think they're two different regulations that were designed in isolation. I think one common theme that runs throughout them is kind of consumer empowerment. So, and that's something we're seeing throughout the whole globe. Whether it's UK leading the world on open banking, that's about consumer empowerment. Making sure consumers are in control of who they bank with, control of their data, control of who writes and takes money and writes their data. And that's something we've seen across the whole globe. Australia, Canada, India, Japan, they're all sort of jumping on board and looking at the UK intently. And I suppose the ones that have a specific focus on empowering open banking programs through consumer empowerment are the ones that kind of are looking at how GDPR impacts us. So you see Australia with their consumer data right. Yeah. I think they're now designing the consumer data right around open banking in conjunction, which means ultimately I think that they will get the consent journey and they will get the consumer empowerment level probably right. Yeah. Whereas we might get it wrong first off, and we might see some conflicting views between GDPR and PSD2 or indeed open banking.
And I would say that the actual API specifications that are developed in the UK have been built with both PSD2 and GDPR in mind. So they've got the principles of GDPR built in there around data minimization, getting explicit customer consent, and it's also aligned with PSD2. So there has been a Herculean effort last year to come up with a spec that actually meets both regulatory requirements.
Yeah. So you mentioned empowerment and consent. Do you think it's clear within the regulation who has the responsibility for obtaining consent? Because I think the subject of obtaining consent for personal information is kind of high on the headlines at the moment.
So from first hand, we've gone through that with the work we've done. So as I said, getting up and running in a kind of 2.5 month aggressive timescales, may I say, to actually deliver the first commercialisation of open banking in the sort of credit application journey. The amount of hoops that we've had to jump through, starting with consent, going through authentication, going through the technical abilities, going through kind of the compliance, the amount of compliance, and I'm sure Mark will talk about it.
Yeah.
Unbelievable.
And I think it's, you know, as you feel your way through this, you know, some of this stuff, whilst it's written in technical specifications, actually going through the pain, both internally from an organisational perspective, and also from a regulator's perspective, they've been hugely interested in what we've been doing. They've looked at it, from a really granular perspective, the exact, even down to the journeys that we're putting in front of customers, the branding that we're putting in front of customers, making it explicitly clear who is the data controller, who is taking consent, what is the data that's being used for. So it's incredibly important that you think that through, and you're very clear about it up front.
How do you explain to the customer so they understand it?
Yeah.
I mean, explain to the regulators hard enough, but how do we then explain it to our customers so that they then understand it?
Yeah. So
who owns their data?
Yeah.
Who's in control of it?
So it's definitely, definitely in terms of levels of awareness. So we've been actually talking to customers that have been through the journey that we've just built. And actually, one thing that's clear is the level of customer understanding around open banking from an industry perspective is still relatively low. And you have to remember, people have been taught not to share their passwords and not to kind of go beyond your own doorstep when it comes to banking. So actually, open banking, I guess, to a degree, starts to change that paradigm. And how do you explain that to a customer? How do you get them on board? How do you explain the benefits to them? You're teaching them a new paradigm in many ways, and so that's definitely something that I think is going to impact customer take up, certainly in the short term. What I do think actually though is that the customer value, and it does come down to customer value, but the customer value for some of these use cases, I call them kind of power use cases. Actually, the value from a consumer perspective is really, really high. And I think you probably need 2 or 3 of those winners out there in the marketplace where people have used them, can see the benefit for you to move the needle in terms of kind of customer take-up.
And so how are you going to do that? Because I guess it's about customer education and explaining what it's about, showing them the benefit. If I did a poll in the room, who's heard of open banking? Everybody in this room would probably put their hand up. If I did a poll outside in the street and said, who's heard of open banking? I'd probably get some funny looks. And actually, the banks have done a great job in telling me all about open banking, because your legal departments write to me on a regular basis with a lovely pack of papers that looks like that I diligently read and file in the circular filing cabinet. So what are we going to do? Whose responsibility is it to educate customers about open banking?
I always love to do a bit of a test with the audience, actually, when you come to this stuff, because it's always interesting to see how bankers kind of react. So if it's okay, I wouldn't mind.
Yeah, ask a question.
So the use case I always talk about is mortgages, because it's quite a kind of obvious one around helping customers switch their mortgage, and you can save quite a substantial amount of money. You can save on average, I think it's about £600 by moving to the best deal in the market. But it'd be really interesting, so just with a show of hands, who would be willing to share their transactional data to save £600 if it was with a bank? Just a show of hands. So a fair number within the room. Who would be willing to share their data with a tech company like Google?
Knowingly, I think was the key word in there, wasn't it?
It's really interesting. And then the other one I always love to do, and probably more topical with some of the recent stuff in the press. Who would be willing to share their data with a social media company like Facebook?
Ooh.
What kind of data?
transactional data, so your transactional data. And it's interesting how that plays out. So I think there's a real, the reason why I always use that, I think there's a real early opportunity actually for banks. If you get this right, you absolutely have the right to play in this space, to the point that you were making earlier on. But actually, over time, people will become more and more comfortable as these use cases, kind of get rolled out to customers. People get more and more comfortable sharing that data. And actually, when you look at some of the statistics, and there's various different studies in terms of customer take-up, but actually, when you look at millennials, and millennials is only one lens, right? But actually, people's willingness to share their data because they've grown up doing it actually is far, far higher.
Yeah.
So
That's more out of ignorance than consent, I would suggest.
Yeah.
but it happens today,
Yeah,
right?
yeah.
So, I think there is, when you talk about take-up, I think there's probably a limited window actually for the banks to up their game and get this right.
Yeah. So let's talk about business models and the vision that you have for how you see this open banking world playing out. So we heard on the previous panel discussion, they were talking about ecosystems and platforms and this sort of connected community network. How do you see that playing out? What's the benefit for the customer in all of that?
It's a lot of choice, isn't there? I mean, you've got some banks that do certain products and services really, really well, and the service you get from it is excellent. I mean, part of the CMA remedies is not only opening up all of the APIs, but also in looking at service metrics to do some comparisons with. So not only who's the cheapest, which is pretty much the only metric we've ever had to go on, that's been standardized, to things like, how long do you have to wait on the telephone before it gets picked up on average? What is their complaints resolution timescales and percentage resolved? What are the ones that get referred to the FAWs and then get overturned? So you can start to see a pattern of not only what are the right products and services for you, but you can then start to compare them on a much broader scale than we ever had in the past. And you need to decide if products and services are what you're going to offer in the form of mortgages, savings accounts, credit cards, because banks still make money out of those things. Or is it on the transactional data and becoming an introducer to the banks that offer these products and services? If you're a mortgage origination company, you make a lot of money on selling a mortgage. So why wouldn't you want to have an independent mortgage origination platform that says these are the best mortgages based on the transactional data that you've shared with me and some questions that you've answered about what's most important to you? Is it solely price? Is it wholly digital servicing? Is it the ability to go into a branch? Is it the ability to have someone on the end of a phone? Do you like things like artificial intelligence and chatbots? Are you willing to deal with a bank in that way? With all these things, you can then build up a very complex picture of what the right product for you is, and then just choose it and use it, rather than, well, my current account's with Barclays, so I'll go and get my mortgage there, and I'll stick some money in a savings account there, and why not have a Barclay card while I'm at it? So I think that's how things will change.
I think it was quite telling that you've got the CEO of one of the UK's newest challenger banks saying, I don't know what the model's going to be. Right? So Starling Bank, clear effort on kind of being a digital bank, but opening up a marketplace to kind of hedge their bets. Anne Boden doesn't know where it's going to go. None of these banks know where it's going to go, but it's about having that option. I suppose the way we considered it is I'm not going to paint you a vision of what the future's going to be. I'm just going to say I'll take your existing processes and I'll supercharge them using open banking. So unfortunately, as head of innovation, I don't unlock the big innovation budgets that sit at the bank. I'm always tasked as Equifax by cutting costs. Can you help us with our underwriting? Can you help us with digital onboarding? That's actually quite a fun area to explore when you're thinking about open banking, because when you ask a question, would you share your transaction data with your bank? If anyone's taken out a mortgage in this room, you've shared your transaction data with your bank. But you've probably taken 2 or 3 weeks to do that, and you've had to go into a branch, or you've had to scan a copy, and you might have been fraudulently targeted because someone else has done it on your behalf to apply for a loan. So we've just digitized that. We've used open banking, we've combined partners to create APIs, links into whichever bank, overlay insights on it, and deliver it into technology that we already had powering the underwriting systems of many of these banks. So we can drive down costs, but in driving down costs, we created some unique innovation, all powered by open banking. And I don't think we've scratched the surface yet.
Yeah. So Nick made the comment of, banks don't make money out of some of the traditional products. You just talked about driving costs down, and there you go, there's a margin coming back to make money again. I'm thinking about making money here, looking at RBS, who might have an interest in this part of the debate. So, Stephen, is this the end of free banking with these new business models that can rise?
I don't think immediately, no. But I think it's back to the earlier point that no one knows quite how this is going to turn out. So it depends whether product play model or a data model is successful as a business model as to what happens to free banking. Yeah. But I think one thing will happen is that because you've got the, as Nick mentioned earlier, about open data and product information being more widely available to be able to do comparisons, people are going to see greater transparency of their fees and charges. Mm-hmm. And I think that act alone is going to start putting downward pressure on those. Yeah.
And the Vickers report originally said we should start charging for banking and making it, for current accounts and making it visible to the customer. I mean, that was back in the early 90s.
Yeah, yeah.
I mean, it's a concept that's been around for almost 2 decades now.
Yeah, yeah. Well, I guess, if you're receiving a service and you're not paying for it, then, you become the product, right?
And that's why I think that if you look at one of the kind of switching use cases, because other part of the CMA remedies is looking at getting a kind of small business comparison app in the market, because those customers do pay for their banking, and to be able to see, I can save £500 in banking fees in a year by switching, that's where you might see some early adoption. Yeah.
So do you think there's a revenue model in there? So you can save £500 on bank fees. We talked about saving £600 on switching your energy supplier. I feel like it's turning into a bit of an auction here. You mentioned comparison, and comparison sites are nothing new. That's how they make their money, by originating those sorts of things. Do you think banks will move into that business model where they can take a commission or charge a small fee for spotting that a customer may save £500, £600, £700 on a utility, for example?
Yeah, I would. I mean, I have a place in Spain, and I can never figure out what's the cheapest electricity to buy. So I pay a €4 fee a month, and somebody searches it for me and switches it, and then shows me what I've saved year on year. Right. As long as I'm saving more than I'm paying for something, I'm quite happy to do it. Mm-hmm. And banks have transactional data. Imagine a scenario where, you go on holiday every year, and it's a 5-star 2-week Caribbean holiday. Well, why don't we use that data to say, take out a Virgin Atlantic credit card, save a bunch of money, spend a bunch of money on that card, and then go to Virgin Holidays and get yourself a nice Virgin holiday, and we'll give you a discount for using the card, and you'll probably get it for £1,000 less than you've spent on it in years past. Yeah. Now those are the kinds of things that customers would want their data to be used for. Yeah.
I think it depends how deep you go, though, because you reference kind of if someone like RBS started referencing or recommending holidays to you, or started recommending something kind of out of their comfort zone, outside of financial products, there is a risk there that if something goes wrong with that, then they'll associate that with the brand. So if RBS switched my broadband provider, but that switch doesn't go smoothly, and I end up without broadband for the next day or so, I'm going to blame my bank because they recommended that service provider. So I think there's very small steps that you've got to go along to kind of recommend own brand products, maybe make the step to go kind of open market in product comparison. And I think there is an emerging market there. You've got ClearScore, massive valuation the other week, getting bought. I think that just proves where some of the other players are looking to broker and to own the customer experience and broker back to banks that provide the kind of core service. Right. So that's a massive kind of competitive space, I think, is who owns the customer at the end of the day.
So how far do you go with that? So, let's say you've got an app that says, look, we see you buy a Starbucks coffee for £4 every day. Do you know that if you bought the Americano rather than the super tall, skinny venti latte, you could have another holiday this year? Do you go that far in recommending things to your customers?
Well, there are, the third-party apps, right? I guess you could build into your ecosystem where, they round up. Moneybox, for example, would round up your coffee, and why are you spending £4 on a coffee, Nick?
I don't.
But I think I think it comes back to the underlying customer value. So aggregating is one level, so being able to give insights. But the insights, unless they're actionable, they become over time, over a relatively short period of time. Actually, you start to ignore some of those behavioural activities. So you need the use cases that add real value to back them up.
Yeah.
And actually, we were talking about marketplaces. I think even when you look at some of the marketplaces that are out there today, there's still a huge amount of friction in terms of switching or even signing up to some of these services. So until that friction is resolved within the system, actually I feel that there's probably a way to go on marketplaces.
Okay. And when you talk about marketplace and ecosystems, I think obviously big focus on banking APIs, which is, that's what we're talking about obviously. But I mean, the whole point of APIs is that you are integrating APIs potentially from lots of different industry sectors. So this is why I think we don't know where it'll end up, because you'll end up, I think the applications that win out will be ones that successfully integrate banking APIs with APIs totally unrelated to banking.
Absolutely.
And build a real value proposition.
Yeah.
And that's, if you look at the success of Apple, that's what it's built on. Yeah. It's not built on primarily the phone, it's built on the Apple Store. They opened up their APIs to their platform and got the developers, and I think most of the revenue comes from selling apps and having that marketplace of people who are building, integrating their phone with other things outside of their phone.
Yeah. Let's we'll come on and talk about APIs in a moment. I'm going to stand over this side, show some love to this side of the room. You mentioned you asked a great question about sharing data with social media companies. So quick survey. How many people have got a Facebook account? Put your hands up, most of the room. How many people have got WhatsApp, regular users of WhatsApp? Most of the room. Twitter? Most of the room, better do one of ours. LinkedIn? Most of the room. And Tinder? just thought I'd cover all the bases just to make certain. So we've seen where our customers hang out, right? There was one or two. There's people laughing far too long. So there's one or two, or we've seen lots of ecosystems that already exist, social media ecosystems. We've seen how WeChat in China has done just that as a social media company, now providing banking services and so on. So what's the view, just sort of final point on this sort of marketplace thing? Why aren't banks leveraging social media ecosystems rather than trying to build their own? And how are you going to attract customers to come to your ecosystem, so that when I ask the question next year, who's in the XYZ bank, we'll have a room full of hands.
So let me go first. So I think they actually are leveraging some of these ecosystems today. So First Direct a couple of weeks ago launched Siri Pay as an example. In terms of Amazon Alexa, there's work ongoing. They're starting to reach out, create banking services, and they're trying to attract banks. I think the reality is it's a bit of both, right? So you need to be where your consumers expect you to be, and that means creating your own ecosystem. Or my view personally is that means creating your own ecosystem where people come to you for stuff. But it also means, where appropriate, you're actually playing with other people's ecosystems as well. Because that's the only way that you'll be where the customer expects you to be.
And talk about that value exchange, because the question you asked, who'd share your data with a social media company, and not many people said they wanted to. So how do you get that value exchange to work? How do you get customers to share their data with you in your marketplace, in your ecosystem? Stephen, you have a
I think that maybe with GDPR, and back to GDPR, the nature of data is going to change as well. Because I think over time, customers will begin to realise more and more the value of their own data, and wanting to have control of their own data, and actually seeing some value given back. So a lot of customers use social media, use Google, etc., and they see getting free email and getting some of those free services as part of it. But I think when they begin to realise that Google is making, probably something in the region of £30 per user in the UK, just off online advertising, monetization.
Yeah.
They're going to think, well, actually, maybe I should be getting more value back than just that.
But then I would say, I don't want to share my data for 30 quid. It's not worth it for me for 30 quid. But it's worth it for Facebook to take 30 quid off of everybody, because then that becomes billions, doesn't it?
Yeah.
So there's an economy of scale here in sharing your data as well, because I'm certainly not going to pay, what, 2.5 quid a month for my data. It's not worth it. I'd rather nobody knew it.
Yeah.
Unless I controlled it and knew exactly what benefit it gave me. If it meant I get a cheaper mortgage, a cheaper holiday, a cheaper deal on a car, cheaper groceries, whatever it is, that drives me. Or better, it could be better service. It could be that, I do something that I want a lot of service from it. Maybe investment advice, and I want something more personalized. Pensions advice, I probably want something a bit more personalized. The way I spend my money and all of those different layers that kind of come together that form me and my lifestyle is what's important to me. So the second you start using data badly and driving ad choices to customers that think, what the hell have you sent me this for? It's nuts. Yeah, I'm in a WhatsApp group that we have some single guys in there, and then when I go onto my Facebook, I get ads for Tinder. And my wife says, what the hell are you getting ads for Tinder for on your Facebook feed? I think, well, it's because of WhatsApp and what we're chatting about on there. So.
And what did she say about that, Nick?
So I think it's important that we, using the data in the right way is really important. It's got to drive value for me individually. And we talked about AI earlier. I think that's going to be the key. Really, really decent AI systems that understand me and drive that value to me as an individual is the important bit, not just generic targeted advertising.
Yeah.
Well, it's interesting, Nick. I mean, not only your views. I mean, maybe obviously everyone's different, of course, on this. But you look at Target, the chemist in the United States, who effectively some people don't like being targeted. Maybe some people sound like you do, but some people don't. And in that their targeting was done in such a way that they produced printed booklets with very targeted advertising. But some people didn't like that, so they put in things randomly that are totally irrelevant to that person. They knew they were relevant, so that people didn't think they were being targeted. So it could be if you're a new mother, they'd have loads of baby products, or then suddenly they'll stick in an advert for a lawnmower or something, just so people didn't think they were being
Target. I think the famous one with Target was that they told a father that they were about to expect a child before the father knew.
Yeah.
That connection to Tinder again, isn't it? So let's talk about APIs for a second. We touched on it right at the beginning, and for those who've been in the technology industry for a long time, you'll know APIs are nothing new. Application programming interfaces. That's how mainframes can talk to the outside world and so on. We've been using APIs for years and years. I went on a trip up to Edinburgh recently. And British Airways have their app. They publish their portals with their third-party APIs. They connect to other third-party APIs. They can book holidays and cars and car insurance and so on. So as a technological concept, they've been around for a long time. What's been the challenge and the difficulty in some of those banks hitting the original deadline on PSD2? Julian, I know you've been very close to developing the APIs for your bank. What is the complexity and the challenge in there around banking, open banking?
We went live on the date, so that was a big relief for us. But yeah, I mean, it's not, as you say, I worked on APIs going back my programming days, and it was quite simple because you trusted the call. These are very different to, I think, the APIs you're talking about from the early days, in that you are now talking about external parties. You've got customer data, so the security has to be absolutely dead on right. So the biggest, industry-wise, the biggest challenge was the security model, and that's the actual API themselves probably relatively small compared to the whole framework of how the interactions work and they're secure. And internally, our main challenges was exactly the unknown demand. We're building an API, it's a brand new channel, but no one knew exactly what the demand would be. So you have to architect for an unknown demand. So that drove us to using cloud technology, so we could roll it out small scale, knowing that we could easily expand it as we needed to. And that was that's definitely not using mainframe type architectures. It's using very much cloud-based commodity hardware architectures. So that was, as a technologist, that was great because that has really driven that kind of architecture within the bank. So yeah, I'd say scale And effectively everything we've built now around APIs is built to perform at scale, so we can elastically scale them up and down as we need to with an unknown demand in the future.
One of the CEOs of one of the other fintech banks was soon to jump on this timescale issue some of the banks had, and made a comment that actually the big banks don't have any interest at all in developing APIs for the world to consume. They'll do it for the bare minimum of regulation, but they'll be horrible and rusty, and they won't scale, and quite ugly and so forth. I'm not getting that impression from this panel here, but is there a comment if said CEO was in the room, which I don't believe he is, what would your response be?
He needs to come along to some of the API development working groups that the industry has. And you will see that it's not banks putting the APIs, it's third parties involved, it's regulators involved, it's trade associations, and it's building as open a standard as possible in the timescales. And back to Julian's point, we are saying that this is a new channel. This is going to have similar performance to our existing direct channels today.
Let's not kid ourselves. This is the start. These are the basic things we have to do. There's no reason banks can't develop other APIs that they can let everybody consume, or they could have a closed network of trusted third parties that would consume those APIs. There's nothing to stop you from having a closed network of external APIs that you only share with certain third parties to offer even better products and services. But this isn't meant to level the playing field so that everybody has the exact same product again. It's meant to open up ways to create innovative and new products that are competitive and that do give you a unique competitive advantage that increases competition, because when somebody does that, somebody else will want to do it, and somebody else will want to do it. And before long, we've got a much richer set of products that will suit a much broader spectrum of the UK consumer marketplace, and that will eventually spill over into retail business banking, then larger SME banking, et cetera. And we'll see a major shift to much better products and services. But let's not just limit ourselves to saying it's based on the open API standard that we're developing as a result of PSD2 and the CMA remedies.
I think the banks have got an advantage from an impartial kind of perspective. It's comparing kind of a traditional bank to a Monzo or a Starling. These banks know how to make money, and they know how to create business models that make money and then that keep them in business and keep them delivering consumer value, right? Yeah. I don't think any of the challenger banks have quite cracked that yet. And I know it's kind of a cliche that everyone talks about, how do the new challengers make money? If they don't know where the business model is going, I don't think they can shape that business model to create new APIs that create value. Yeah. Mark's in a job called Head of Commercialisation for Open Banking, right? I speak to most banks have got a similar role. And whilst one side of it's quite fun, it's actually the future of the bank and the future of people like Equifax is about kind of taking our data and exposing it to a new network of partners. So if a bank, I would be very surprised if a bank stops when they deliver their regulatory APIs under PSD2 or open banking, because they're all thinking about how they commercialize open banking through new APIs that they can expose to partners. You looked at the US, for example. Yeah. The US, it will be a long time before they see regulation driving open banking there. But you've got Wells Fargo doing partnerships with banks. This notion of closed APIs is already in existence where regulation doesn't drive it. Closed APIs are just monetizing your data and being proactive about it. So we're kind of playing a little bit of catch up, I think, in the UK. But you've got the infrastructure now to expose APIs, which is half the hard work done.
And has been a catalyst. I mean, so the very fact that open banking and PSD2 is sort of in the press, we've got customers, certainly commercial customers, now asking about APIs. So not only you've got guys at the top of the bank talking about APIs, customers are, and so there's clearly a commercial demand for certain segments of customers to consume bank APIs on a bilateral basis that are out beyond what we have to deliver the regulation.
We have to remember too that for a bank like Monzo and Starling, they don't have some of the, I'm not going to say legacy technology, but legacy customers that expect a bank in a certain way. Customers still want to come into a bank branch with a passbook and say, here's 20 quid, can you stick that into my account for me? And when you talk about your cost-income ratio and your cost of operations, we can't as an industry just say, well, they're too expensive, I don't make enough money off them, let's just shut that whole part of society out. You know, there's still a role to play for the, you know, what's considered the more traditional banks in making sure that the entire market is served. So, you know, we do need to look at how that changes. And I didn't have a chance to ask the question, but I'm curious to know what people's thoughts are as to when we start to see an end to branches. You know, is it 30, 40 years? Is it never? You know, is it a generational thing? Isn't it? You know, will there always be people in society that want to go into a branch? And do we have to keep those distribution channels open? And what will happen when Monzo and Starling take a large percentage of the current account market? Will they then have to get into the debate about opening up different physical channels as well? Who knows? I mean, I don't know where any of that will go.
So I'll come to the audience for some questions in a minute. In fact, I'll probably go to the audience now. If there's anybody who is looking to ask a question, I think the panelists have done a great job so far. I can continue asking questions all day long if you want me to, but I'm sure we get quite tedious. We've asked some questions of the audience, so I suppose it's only they'll be keen to ask some questions in return. If you could put your hands up so we can see if anyone has a question. If you could introduce yourself.
So hi, I'm Paul Belanti. I work for Microsoft. I look after HSBC. A lot of the regulation is driven towards almost making the banks like utilities. What do you think the view of the regulators will be if banks start to look at sort of adjacent businesses and new business models? Do you think that will be supported, and what's the panel's view on that?
Do you have an example of a new business model?
Well, I suppose there's things like, you know, as things progress, you might see things like driverless cars coming along. Will the banks start to maybe say customers don't really ever want to own those? Would there be an option for banks to own and charge back for infrastructure type services like that, commercial property, different things that might generate extra revenue streams outside of what the traditional banks do? Similar way to how retailers are now starting to look at banking services with banks as a utility behind them.
So I mean, I was talking in Finland probably about 6 months ago, and it's interesting when you go over there, actually, some of the banks over there have taken a completely different view, I guess, and have expanded their model probably in a more extreme way than I've seen elsewhere. So there was one bank who had built a hospital and was managing the value chain right the way from managing kind of private premiums around people paying for access to healthcare right the way through to actually building it. And they were building a similar ecosystem when it came to houses. So they were building houses, they were then charging, you know, service charges that sit around those houses, you know, managing those service charges. So I think you will see those models starting to pop up, and in fact they are already in other jurisdictions kind of pop out. I think it will be interesting to see how the regulators kind of evolve to keep up with, you know, those changes in business models. But one thing's for sure is they will have to evolve as regulators.
Any other questions? One at the front here. Tell you what, you can have my mic, save the team running from the back. There you go.
Yeah, hello, my name is Stefan Erner. I'm from Handelsbank in Sweden. And I have a question about the PSD2 APIs and all the other APIs. What kind of other potential things do you see? And as I said, I mean, APIs are nothing new on the one hand. Now we have in one part a very regulated environment, and the rest is totally open. So how do you see, what are your strategies to drive this forward to not only become compliant, but really drive this beyond compliance?
To touch on this a little earlier, it's that whole lifestyle, and are we just talking a financial lifestyle or a whole lifestyle? I mean, certain things that I would be interested in are, you know, where are the best investment opportunities for my pension? You know, who charges the least amount of fees? Where do I get the most advice? How has historically that advice been right, and how is it tracked against other investment products? There's a whole host of things you can do. I think that then becomes competitive, and will that get regulated? It might, if it becomes pretty prolific and people aren't doing it properly and securely. I mean, some of these comparison websites that we get now for insurance and energy, they're owned by insurance companies. So it's not as independent as people like to think it is. And some of the insurers like Direct Line, that they don't serve their data up. So how do you get a true picture of the market unless it's regulated? So I think it will, but it's probably going to take us 2 or 3 years to land all this before we start looking at other things. I know the open banking guys are looking at other things, but what are the easy use cases? Things like mortgage comparisons. It's another great one. It's where people spend a lot of money every year.
But what I think you're going to find as well is that one potential model is looking at more of an Amazon approach, where every product, every service you do becomes an API, and you actually kind of take apart your existing propositions. So KYC becomes an API, identity becomes an API, getting some data analytics becomes an API, getting credit becomes an API.
I think what we have this concept of kind of open data. So I take Handelsbanken kind of model, the kind of decentralized branch network, all kind of local banking. You would probably have to force someone to come into a kind of branch to do that personal experience. If you're thinking about digitizing that, then that might not change significantly, but you might push them into control of kind of their own data, where they come into branch and they show you a digital copy of what their assets are. And that's one thing that APIs do enable. It enables you to take your assets and turn them, digitize them. So we have this concept of kind of a big drive for myself is to kind of create the ultimate bank statement, right? So I log in and I can now we are delivering bank statements, e-bank statements for whichever bank you bank with in a lending journey. But that's not enough. That's not enough to understand an SME, for example. An SME might do all their banking within PayPal. So if I can then enable the API that PayPal stood up, and I can actually, as an underwriter, go through into a digital bank statement, and it suddenly has a little highlighted hyperlink on the PayPal thing. Okay, click on the hyperlink. Hyperlink sends out a URL and gets the consumer to log into their PayPal. Suddenly you've got data enabled through an API, and that PayPal is kind of populated with the business data that they've got. Further examples through Xero and accountancy software packages. All the way down to the likes of dunnhumby data on your Tesco club card points, right? All of that data, starting with your digital bank statement, or indeed starting with your credit file, can be filtered down, and APIs enable us to get that richness and that granularity on a level that we've never really seen before. But it's all about can you convince the consumer that enabling them APIs is the right thing to do? So with GDPR, there will be digital data flowing through the system. And huge amounts of digital data flowing through the system. It's just pulling that together in the right use case, I think.
I think there's two sides to it as well. So when we started out on the journey probably a year ago, and we were writing the strategy, we came up with a list of use cases. The reality is, this thing is almost endless, right? I mean, we came up within a very short period of time, I think it was a week or so, we came up with over 100 use cases for open banking. And that was just with the stuff that that a few people in a room thought about, right? So I think there are two sides, and I think it's been covered actually in the conversation quite well. So there's absolutely the consumer side, so will the consumer get value out of it? And I think the other thing which is really important is actually organisationally, which is the point that you were making. What are your strengths as an organisation? Because the reality is you'll never build 100 services overnight. You need to be very clear at how you as an organisation sit, how you play, and actually where your strengths are. And you can always partner for the rest.
Good, thank you. Other questions in the room? Trying to see through the dazzling stage lights. There we go.
Hello, Valerio Giannunzio from Capgemini, Italy. In my opinion, based on what I understood so far, banks have two different options to embrace open banking. The first one is to develop their own APIs to open to new marketplaces. The other one is to embrace new business models, as the example that you were making before on the utilities market. So integrating other people, other banks and other institution APIs. Based in your opinion, which is the most winning approach, if there's any?
Sorry, what was the last part of the question? Based on?
Which is the most winning? So you're saying inward and outward sharing. He's saying which is.
Oh, I think it's both. I mean, it depends on what you want to do. I think we have Feeder Bank talking to us at some point during the conference, and they had this open marketplace idea where they built the KYC and the current account side of things and the connection to the payment systems, and then partnered in kind of a sort of a closed ecosystem, I suppose, with trusted third parties. A couple of the French banks do it really well as well, where you could do precious metals trading or forex trading or futures trading just using the KYC that they provide us. So that's a good example of things you can do with that KYC going out. And then Feeder Bank, I don't know their economic model, but you would imagine they would then take a certain percentage of those transactions. And then on the outbound side, I don't want to share necessarily my customers' data, but I might share some product data. Say these are my mortgages, and these are the terms and the conditions. This are the service levels we have. These are the savings account. These are the percentage rates you get. And I might pay somebody to introduce me to a new customer through their channel. So there's a lot of different ways that you can use this both inwardly and outwardly. And I don't see certainly a strong balance one way or the other at this stage.
I think a couple of the banks have made their play. I think the Barclays guys are a good example of how they've made a very strong play, and they've made it in a physical sense. So I don't think any of the banks have kind of made their 5-year agenda clear about what their new business model is going to be. But they've certainly all established innovation labs, and they've certainly got offices in Shoreditch, right? So Barclays did that very early on with their RISE program. They've got 200 plus fintechs in there. Now, the banks are big enough to buy whoever they want, right? You've got Tandem buying up Parity for their analytics and their customer base. You've got banks partnering with fintechs left, right, and centre. It's about jumping on that opportunity as and when you need it that I think becomes important, because your strategy is an emergent strategy. It's not defined now. It has to adapt to what's going to come your way, and it's going to adapt to what the consumer actually wants at the end of the day. So we talk about kind of consumers want this, consumers want that, consumers want digital. Not every consumer wants digital. We've just got to accept that, right? Not every consumer wants a branch. Not every consumer wants to use open banking. We've got to kind of accept that the customer of the future is probably more difficult than what we're used to now, and probably won't accept for fixed rate products. They'll look for different products and services, and look for choice, and the ability to adapt to choice. So the different models, whether physical like in the Barclays sense, or whether kind of digitally enabled through the kind of Bud marketplace that HSBC are exploring, those are the enablers, I think, that enable banks to adapt in their strategy in the future.
I think exactly that. I mean, there is no right answer to this, as we know, and if we knew the right answer, we'd probably finish the conference now and all go home, I guess. So, but because of that, it means that it's changed the way we architect things, and we have to be, a lot more agile. I don't want to use the word really, but that's the way the world. I.e., you're ready to move. As things come up, you can react quickly, and that's, I think, that kind of one of the catalysts of open banking is force banks to think more like that, so they are ready to react to new trends in the market, which are going to happen quicker. I think
it's funny that Capgemini and even the big consultancies that sit around the boardroom are asking these questions, right? So that's telling in its own right. If you've got the big consultancies asking the banks what their strategy is, if you guys don't know, I mean, we've all just got to accept that the future's unknown.
So the customers of the future probably not the same as the customers today, or their drivers and aspirations may be different. I'm conscious of time. I'll just leave the last thought with you, Stephen. Is the industry of the future, the bank of the future, will it be unrecognisable from what we have today?
Not totally, but it will be different.
There we go. You heard it here first. Stephen, Nick, Mark, Roger, Julian, thank you very much indeed for your time. Thank you for sharing your thoughts with us. Round of applause for the panelists, please.